You do. We're live on a Tuesday afternoon. We're here because the time is now to best understand the stuff that we're all trying to understand, the things that we're playing with, the things that are not just a game. It's not just playing. This is stuff that has the capacity to change not just our lives, but frankly, the fundamentals of an entire country, all the countries around the world. This changes everything. We know what we work with on a daily basis. We know the existing system. We know our existing routines. What's up, Cat P? Good to see you. Yes. We know we wake up every morning and work. We know we go to a bank and we put in money and we go to stupid ATMs and we pull out these little pieces of paper. We know we have a plastic card with a stripe on the back. And we know the security and the technology involved in that stuff. And what do we also know? We know how pathetic it is. We know how old the existing system is, and we know that it's wrong. We know in our guts that it needs to be better, it should be better. And there's two things, as I have said, that are required for fundamental disruption. One, the technology needs to work. Two, it needs to be profitable. And that is where we are. It has happened time and time again throughout history. It is happening with the auto industry. Gasoline car, the maintenance is zero. It's trivial maintenance. The tech works. It needs to be profitable. Imagine if here I'm digressing a little bit, but imagine if an electric car is $15,000, has zero maintenance, and the counterpart in gasoline is substantially more sophisticated, has a very complex drivetrain, requires oil changes, requires emissions adjustments, requires whatever kind of maintenance it needs, and it costs 20 grand and $1,000 a year in maintenance. It is cheaper. When the technology works and it's cheaper, the entire change happens. And that is exactly what is happening with financials right now. And frankly, it's been probably about 2 years with the DeFi movement really picking up speed. But we can do on DeFi what banks do now. Let it scale up, because it's clearly not going to handle hundreds of billions of dollars and trillions of dollars. And that's obviously what the banks have proven that they can handle. But everything needs to start somewhere. It needs to scale. And that is the only missing component, because the system that they've built works. The search for yield is alive in DeFi. The carry trade is a traditional trade in traditional finance, and you can now do it in DeFi, where you borrow at a lower rate than you earn and pocket the difference. Remind you of something? Yes, that's exactly what happened with comp and why comp was so explosive. I wouldn't touch comp with a 10-foot pole right now, but that's another story. Sure, you could throw Tether, DAI, or whatever into comp. No reason. You're not going to earn much because you've been priced out. You got thousands and millions of dollars. You got millions of dollars in comp and you're priced out. So that's another story. And that's strategy. And these are a lot of considerations we have to make when we choose to allocate funds, so on and so forth, whatever. Anyway, this system works and it's better than the legacy system. We can now earn yield by lending money. We can earn yield by lending our assets, which is exactly what banks do. Banks accept deposits and then they lend it out because they're required to hold 0% in reserves currently due to the crisis. They get 3.5% on a mortgage. They give you 0.01% interest. Yeah, that sounds great. No. And that's exactly what we can do now. And that's what this yield is. It's the exact same thing that banks do. It's real. All right. Anyway, so the whole point of this conversation today was inflation and deflation, and that concept is a very fundamental analysis that contributes to our capacity to understand these projects. And UTXO and smart contract fundamental analysis is slightly different, but inflation and deflation are broad concepts overwhelmingly applicable to both. UTXO, inflation and deflation. Any Bitcoin is inflationary. Digibyte is inflationary up until a limit. Obviously, there's a max supply, but there's an emission rate. FYI, let's give numbers. Bitcoin has a 1.71% inflation rate. Digibyte's at about 13, give or take. Oh, here's a good one. Ripple, XRP. Ripple, it's not Ripple. Ripple's company. XRP has an inflation rate of 27%. Why don't we Wikipedia and look at countries that have an inflation rate of 27%, and let's see how those countries are doing. So I'm happy to talk about Ripple. Not necessarily something I want to digress into currently. It's a wonderful payments technology. That's no doubt. That is absolutely unquestionable. We'll talk about that in another video. You guys got to ask the question on Twitter. Ask it on Twitter. I'm going to talk about it in a video. So we just talked about two of the most awesome projects, Bitcoin, Digibyte, and they have an inflationary component. What is most pertinent is if the technology and the adoption and the capabilities overrides the inflationary component's capacity to diminish the purchasing power, which is exactly conceptually equivalent to what happens with the dollar. So I don't see any way the inflationary component of the dollar printing $6 trillion isn't going to destroy the purchasing or the purchasing power. So whereas with Bitcoin and Digibyte, these are in their infancy. The vast majority of the planet doesn't know about it. So the demand for it on once a critical threshold is reached overwhelms these relatively trivial but meaningful inflationary components. But these are UTXO, and UTXO BlockNet has an inflationary component. So if you run a whole block, you want to push for a service node, or you want to stake. So the staking component, you're getting rewards, which compensates for the inflation of the system. My man, just at the current rate, dark nodes being set up, circulating supply will have been dry. So now you're getting into UTXO land. So smart contract land. So UTXO is very it's old school. It's the origins of the crypto space, and it has a very it's not as complicated to understand the fundamentals, the inflation, deflation. Any proof of work chain has an emission rate, so there's an inflationary component until you hit max supply, and there's complexities and conversation to be had about that. More of the exciting stuff is what's going on in smart contract land. As OJJ says, guess what staking is in smart contract land? When you are locking up assets, you are taking them off the market. You are restricting supply, which is a deflationary pressure. REN is approaching probably 10% supply locked for the dark node bonds currently. That is 10% less REN on the market. If there's an equivalent, if not increasing demand, and a 10% restriction in supply, that is an overwhelmingly appreciative pressure. It will appreciate the price. People will pay more because they cannot get it as easily. Absolutely incredible what these brains have done when they have created and crafted these smart contract protocols. You're not, is there any deflation? Is there any burn? There's no burn in UTXO land. I don't think so. But so the burn, destruction of assets. Well, there is burn. Well, that's Digibyte assets, Digi assets. So there's a burn component there, but it's not the actual Digibyte itself. That's it. So what's happening is contract land is protocols that have either a staking component, which takes supply off the market, or 2, a burn component, which destroys a quantity of asset. Holy moly. Rocco Reed says if the same money went into XRP at $3.80 all-time high, oh yeah, that's another story. So we're talking big numbers. I could talk about Ripple. It's a nice conversation. I have good things to say, uh, only good things to say. I could probably say I would have known it, but that's. But the bear actually here's an interesting. I'll digress a little bit into Ripple. So it's a wonderful payments technology, no doubt, and it could revolutionize the world. Why won't I own it? Because there's absolutely no fundamental reason, the fundamentals for its price to appreciate. When you do a Ripple transaction, there's a fee, and that fee is burned, and that fee is trivial. In the entire lifetime of Ripple, almost nothing has been burned. It has a deflationary component, but it's basically zero. There is no meaningful deflation in Ripple, so it basically has a constant supply. So therefore, the only reason for it to appreciate is supply and demand and adoption. But the only purpose of it is transacting. So I don't know. It gets complicated, where it doesn't have a utility beyond the payment processing. So I'm not a big on crypto payment processing at all. I don't think that is at all the most useful aspect of cryptocurrencies. I think the governments have a monopoly in processing. And that's fine. I think the utility of crypto projects is so much more meaningful. These are businesses. These are actually businesses that you could say they generate revenue, but there's these analyses that you could apply to the tokens and the services and functionality of the projects that are analogous to business. And that's profound. So I'm not a fan of payment processing at all with regard to cryptocurrencies. I think CBDC, central bank digital currencies, it's just going to happen, and they're going to have a monopoly on it, and that's fine with me. I think that's a-okay. Digibyte is a profound technology. It is far superior at the protocol level than Bitcoin, period. It's not going to replace Bitcoin. It may never have a market cap even remotely comparable to Bitcoin, but that has nothing to do with what was crafted for its protocol properties. The protocol properties are better. Do bear in mind that just because something's better doesn't mean it's consumed at the same rate as something that's not better. I mean, look at Linux and Windows and OS X. It took forever for Linux to catch on, and Linux only caught on really with Android, and that's why it's massively popular. But OS X and Windows are still dominant in the PC industry, and Linux being free, completely free, never caught on really in the computer industry. So whatever. So point being, Digibyte's awesome. The protocol properties are superior to Bitcoin, and it has a capacity to be the front runner in the data storage and asset management service industry. It's the premier component of a bucket of UTXO cryptocurrencies that transform and manage assets. Rocco says I bought XRP because I got it at 0.05 and unloaded it. Oh, sure. But that's exactly what I was saying, the speculation, supply and demand, the people traded on the markets. So that's fine, and that's okay. As a technology, it's great. As a fundamental analysis, there's absolutely no reason for it to appreciate. There's no deflationary component. Inflationary things tend to lose purchasing power. Deflationary things, the purchasing power increases. Period. Rocco says beta was better than VHS. You're damn right. The fidelity was better. But you see what happened. So that's what I always come back to. There's two reasons that better wins. Technology needs to work, and it needs to make money, because if it makes money, the companies are going to sell it. So obviously, how about that? Here's an interesting statement. Beta, the technology worked. Two, I guarantee you, for whatever they did in the boardrooms, it wasn't profitable. Because if it was profitable, it would have been sold to the teeth to the general public. And that's why it didn't work. Something was off. Maybe it cost too much for the components. They couldn't get the price point right. And that's what happened. Anyway, so UTX, smart contract land, smart contract land, deflation and deflation. What are the top most awesome, interesting projects? REN, we've spoken about. It has a deflationary component. It has a fixed supply, but a deflationary component because the dark nodes are taking supply off the market. Holy moly. Combine that with the finality of what a dark node really does. And you have an absolutely ridiculous investment that has the potential to appreciate at the asset level, the token level, as well as a recurring revenue stream. So when I look at projects, in some regards, I don't care about a token's appreciation. What I care about is recurring revenue streams, which is what I've talked about in many other videos. Rocco says, don't they say that something needs to be 20 times better than the current king of the space to displace it? I really think it's just money. It's profitability. If something has a potential to produce revenue, it's going to be sold ferociously. So, smart contract land. Kyber Network, with its new protocol update coming out soon, might be the craziest thing, because look at what Comp did with its IGO, initial governance offering. That's their governance token. Kyber, KNC, is their governance token. It's already fully distributed. So you basically have a chance to acquire 20,000 comp or whatever you want to buy. You know what I'm saying? It's already fully distributed, and they're about to, with their protocol upgrade, there's two components that are crazy. There's the staking, which is taking supply off the market, and then there's still the burn. Every transaction on the Kyber network burns Kyber. So it has a double deflationary component. And the third component of transaction fees is being sent to the liquidity providers, and that's going to incentivize marketing and integrations and more liquidity. So I just tickle pink by what Kyber is doing. Inflation has such a potential for short-term and long-term price appreciation. Congestion on Ethereum network due to additional coins and DeFi, yes, that is an issue. But bear in mind, it's also an issue of scale. So if you're dealing with, $10 in a liquidity pool, let's say you got $10 worth of SNX synthetics, a buck 50, $2 to take worth of SNX SUSD rewards is a problem. But if someone's got 10 grand, 50 grand, and you're pulling out 500 SNX a week. So just in all honesty, that is an issue of scale. But bear in mind, where the industry is heading is there's second layer solutions for Ethereum 1.0. I don't know how the second layer solutions apply to the Ethereum 2.0 concept, albeit Ethereum 2.0 is a solution unto itself for the scalability and the network congestion. How do you like them apples? That's where we're heading into. Solutions, because that's what software does. It iterates and makes the shit now better. That's the name of the game. Damien says, at the top of the next run, do you think staking will help in stabilizing the market at all? I have no idea how it's going to play out at the top of the next run. What I do know is where we are now. We are post-halving pre-pump. We are not at the next run, and the world is changing, and maybe the next run will be different, particularly because in 2017 there was, as we go from 2017, comparing 2017 to now, there's actual business components that are available. These are actual businesses that provide strategic infrastructure components that are meaningful, that are disruptive. This is very different now than it was in all post cycles. So it's unknown, uncharted territory. I think every cycle is going to be uncharted territory. I think DeFi has the capacity to disrupt the entire legacy financial system, which means banks and lending and everything, which is crazy. So we'll see how that plays out. But I sure as hell know I want to be positioned now, because if it plays out and disrupts the entire system, you see, always position yourself where you want to be and wait for the market to come to you. Those are the bets that make the difference in people's lives. But don't chase the market. Don't try and put yourself in front of a pumping coin. You want to do your research, do your fundamental analysis, and conviction. You need conviction, and place your bets and let the market come to you. And then when you make a fortune and everyone says, "How did you know?" You'll have the privilege of saying, "I was in it 2 years before I made my fortune. I knew. I knew beforehand." And now, not only do you have the fortune, but you have a badass story to tell, that you had the foresight and the conviction to see the future. Academy says, "What must we do when our cryptocurrencies are worth millions?" Oh, that's a video unto itself. Remind me about that on Twitter. That's a video unto itself. Please, that's very important. I'm happy to talk extensively about that. Crypto MacDad, I'm concerned about staking. Everyone stakes, but what does the buying when the stakers are selling? Yes, no, yes and no. The staking. What is staking? You're staking on a pool. You're not. The money doesn't come from nowhere. You're making revenue from people trading. You're getting an exchange fee. This is the most incredible. This is how the real world works. This is, so you go to the airport and have the fiat booth. That's their business. That's a liquidity pool. The money booth at the airport. You go to a bank and they exchange your currencies. That's a damn liquidity pool. It's the same exact thing. You go to a bank and you ask for a personal loan of 20 grand. That's compound. That's Aave. It's the same damn thing, except the bank is lending you the money and getting interest. But on compound and Aave, we're lending the person the money and getting the interest. Ah, you see, the money doesn't come from nowhere. It's coming from the exact same place the legacy financial system has been doing forever. OJJ says, "Was it you who was talking about RSR and decentralized stable coins?" Yeah, well, RSR is cool. Reserve rights is complicated because you have a lot of countries around the world that are destabilized because of inflation. Their fiat is basically worthless. Here's where I think RSR comes in, and stable coins for that matter. Let's say Venezuela, Argentina. If the fiat's worthless, you want dollars. But guess what? If you can't get physical dollars, if you can't get dollars, the stable coins are equivalent to dollars. They're a peg to the dollar. If they are easier to get than the dollar, that's extraordinarily important technology. If so, how do you see the future? PayPal on and off ramps. Well, stablecoins have an immense future. I think the CBDCs, I wouldn't be surprised if the US government launches their CBDC using USDC or GUSD and the Treasury directly collateralizing Coinbase, Gemini, and Gemini. Why? Because technology, it was built by Silicon Valley. It's exactly what Brian Brooks at the Office of the Comptroller of the Currency says in all his public videos, that the technology should come from Silicon Valley, and that is what these cryptocurrencies are and these stable coins are. It's awesome, really awesome. Buy when it's boring as hell. Let the phone. Yes, if you're seeing a coin move, you're done. You missed it. You missed it. And guess what? It's okay not to own something you want to own. You think I don't want to own Maker, that has less than 1 million supply and is deflationary? Oh my God. You think I don't want to own 50,000 Link? I'm priced out. You think I want to run a node and compete with the those players that have millions of dollars worth of link that are running nodes that are going to be nodes for the biggest companies in the world, Fidelity, the 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 Chinese currency. There's hints that they're going to use Link to get real world data. Link is massive, but you need a serious quantity and you need to run a node. I'm not a fan of holding coins just for the appreciation of the asset. I want recurring revenue streams. Period. Will Caterpie hit me up with a message on Twitter. Crypto MacDad, why can't Digibyte do what Ethereum does? UTXO is different. It's a scripting language. It's a scripting. So it's not smart contract. It's not Turing complete. Turing complete means it has full software capabilities. It does logic and executes logic. Script is different. There's very tool on Digibyte, which is Bitcoin. It's UTXO. It's scripting. So don't discount the potential for it, but here's what's real. All this fire, all this excitement, it's with DeFi because of the Turing complete smart contracts. And it's not with the Ethereum killers. There's going to be no Ethereum killer. There's no disrupting and ongoing disruption. You can have hope, and that's the bet, like Cardano. If you own Cardano at all, you are betting that they could disrupt Ethereum. They could disrupt an ongoing disruption that is being built out by the biggest corporations of the world that you could see some of them through the Enterprise Ethereum Alliance. And every indie developer, every person that knows how to program JavaScript and knows about Web3, they're cranking out websites left and right, building a burgeoning industry on Ethereum. And if you own Cardano, your entire bet is that they could disrupt all of that momentum. DeFi, everything you see with DeFi. The same thing with Ethereum Classic, albeit they have contract parity with Ethereum. So I think there's an interesting play that could be made. The list goes on and on of the Ethereum killers. I wouldn't waste my time at all. Yeah, BuyDAO is MakerDAO. That's what MakerDAO does. I'm not interested in it at all. Do you see a market cap ceiling for Digibyte? I don't think in terms of market cap ceilings. I think in terms of protocol and properties, and in terms of but I know that it has a capacity to disrupt record storage and asset management. I know that that is a profitable concept, and I see that as almost an inevitability. I think it would be awkward for companies not to consume the record storage and asset management capabilities of UTXO blockchains. So I see a basket. Most of the channel might not be, but we go to GitHub and we find repositories and we have APIs. So a repository could easily have a little package that gives you access to 50 different UTXO blockchains, and the APIs are geared to record storage and asset management, and the developers who are implementing can choose which particular UTXO chain they want to use based on the protocol properties. And that's awesome. Each UTXO chain has protocol properties that may be something that a particular project at a company wants to use. That's the whole point. It's choice. And Digibyte's protocol properties make it unique. POS may be unique property for a different company and a different project. And there's a plethora of properties that we could speak to about various UTXO blockchains that could make a deciding factor in the choice of a company to use one over the other. That's the bottom line. What were you going to say, Rocco? You retracted the message. Anyway, so inflation and deflation. What else? Synthetics. Oh my God. Synthetics literally has the capacity to commodities, the capacity has futures, perpetual swaps. Oh my God, synthetics has the ability to disrupt Wall Street. Synthetics is on a whole nother level of there's no one else. There's a couple of other players doing like options, but synthetics is an entire space. It's an entire ecosystem of assets. What they're doing is incredible, and it's an inflationary asset that's going to cap out in 2023 at 2.5%. But people stake SNX to mint SUSD, which is a factor in the SUSD peg. And that means that SNX is causing an inflationary cryptocurrency to be deflationary. Do you know how much SNX is locked right now? There are 122.6 million SNX locked. That is 64.52% of the supply. Oh my God. Talk about supply restriction. We're talking about 10% of REN is supply restricted. 60% of synthetics is supply restricted. It doesn't move. It's not part of trading markets. Absolutely incredible. And the rewards, what you're getting in return for staking your SNX is incredible. Then you throw your SUSD on a curve pool and you're getting stuff there. And then you take the curve pool token and throw it back on Minter, which is the synthetics management portal, and you're getting additional compensation. So synthetics might be the most incredible DeFi product. What you do is just incredible. Anyone else I could talk about real quick? I hit my favorite synthetics, Kyber, and Ren. Those are. Do not spread too thin, ladies and gentlemen. And obviously, if you do not go all in, you never go into one thing. But if you don't have a tight group, 3, 4, 5, might be spread too thin, and you might not get enough bang for your buck. Complicated. Portfolio balance, I've talked about in other videos. I no need to digress about it here. All right, I want to keep this video a little bit shorter today. If anyone has any questions, you know where to find me. I am on Twitter. You ping me, throw me a question. I'm going to make a video. We got more to talk about because we have to understand the way the system works to win the system, to win financial freedom, which was yesterday's video. Rocco says, I have a tiny group plus another. Okay, another 15. Think about it. Think about it. Portfolio balance, watch the videos, ask some questions. Anyway, I'll catch you next time. See you on Twitter. Hit me up with some questions. Peace.